crypto looks like it's in major trouble as many people are calling for a bear market, and some are even saying that we are currently in one. And I've had a lot of people reach out on the channel who are buying or holding XRP, Bitcoin, Ethereum, or any other major crypto in asking if the current bottom is in and if right now is the time to be entering the space, or if crypto markets are going to experience a heck of a lot more volatility and when would be the right time to enter. As even the Wall Street Journal is reporting that S&P 500, the NASDAQ, slipped below their 50-day moving average for the first time in 138 days, which signals extreme weakness, while the Dow Jones experienced its worst 3-day drop since April. And this volatility, alongside all of the news surrounding Trump and the Epstein files, the infighting over in Washington, the fact that we're now facing headwinds with inflation and it's possible we're now not going to get a rate cut into December, and also the fact that we're seeing a growth in volume to the downside when it comes to Bitcoin ETF outflows, which is going to affect the entire market. But that's expected when everything from tech to crypto to gold is experiencing some moves to the downside due to market uncertainty. So we have a lot to cover and a lot of mixed signals directly from Capitol Hill and Coinbase CEO Brian Armstrong, and also the fact that MicroStrategy is now purchasing even more Bitcoin, which tends to support the market, but for how long while things are down bad? Over the last week, Bitcoin hit a new local low of 91,000, XRP hit a new local low of $2.11, and it seems like buyers are scarce or sitting on the sidelines. So stick around so I can share with you some key levels and pivot points that you'll want to pay close attention to. And for those of you who plan to continue investing into crypto, whether there's uncertainty, volatility, or even through a bear market where you can dollar cost average down, one of the best ways you can do that is through a tax advantaged account like an IRA or a Roth IRA directly through our video sponsor, I Trust Capital. Go ahead and check this out.
Do you love crypto, but are you worried about taxes shrinking your retirement nest egg? Here's the deal. Trading and selling crypto can trigger capital gains taxes, eating into your wealth. A crypto IRA fixes that. Per IRS publication 590B, traditional IRA gains like those from crypto aren't taxed until distributed. That's why we've partnered with I Trust Capital, a leading crypto IRA company in the USA, to sponsor today's video. And they offer institutional grade custody for retail clients that want to set up their crypto IRAs for retirement, leveraging top storage solutions like Fidelity, Wells Fargo, and Coinbase Prime to keep your assets secure. To get started, simply click the link in the description of this video, sign up for free, and fund your account with cash. They also offer 401k rollovers or crypto transfers, and you can trade 24/7 with just 1% transaction fees and no maintenance costs. As always, I'm not a CPA or financial advisor, so consult one for tax advice, and we do earn a commission if you sign up using our link below to fund your crypto IRA account, but that helps support value-based videos like this. And I Trust Capital already has over 200,000 crypto IRA accounts and over $14 billion in transactions, proving they're trusted by smart investors just like you. So click the link below, get started now by funding your account today, and let's create generational wealth together.
So go ahead and check out I Trust Capital through the link below to get any of your questions answered. And as always, my friend, if you're feeling blessed and bullish, comment 777. And if you're going to be the wealthiest person in your family tree, smash the subscribe button. Hello and welcome back to the Bull Runners YouTube channel. If you're new here, my name is Paul. You can find me on Twitter or X at PauliDeFi, PauliDeFi. Now, by now, it is no secret that virtually all assets in the market right now are experiencing some downside due to uncertainty in the macro sector. I mean, everything has been falling from tech to the major indexes to crypto and even gold. And typically money would flow into gold due to uncertainty or a weakening dollar, where governments and major institutions continue to accumulate it as a hedge against inflation and reckless spending in the United States. But it seems no one even has an appetite for gold right now. And so obviously that's going to affect the crypto market, which is less liquid than gold or any of the indexes and is typically more volatile as well. That leads to major sell-offs in assets like XRP from a local high of 250 all the way back down to 214 as of recording this video. So that is not an easy loss to stomach at about 17%. And what's really got a lot of investors anxious or a bit pissed pissed off is the fact that they were expecting a major pump or a rally into the end of the year, number one. And number two, they expected the ETF to provide some additional institutional support. But instead, all we saw on the day was downside, which is not a good indication of underlying strength in the market. Arguably, on a day like that, you should see some positive price action, and all we got was selling. So what's really going on? We've seen a few positive pieces of news, but at the end of the day, not even XRP or Bitcoin can fight the general trend or the tide of the market. So I'll be covering a bit of this negative news, then I'll dive into a bit of positive news so you can make your own decision, and I'll even cover the technicals. Now, the first thing is we are seeing a lot of weakness in the general market, and that is from a global standpoint, as right now the US is preparing $2,000 stimmy checks, which hopefully would support the market. But if anything, stimulus tends to create inflation, and when you have greater rates of inflation, that is going to push or force the Fed's hand to keep interest rates higher for longer. So there really is just a lose-lose situation here. And as you would expect, right, most households will blow through that right away, and it might make its way into the stock market like it did back in 2020, 2021, but I don't think this is going to solve any major problems. Then you have Japan preparing a $110 billion stimulus package, China approving a $1.4 trillion stimulus, the Fed likely ending QT on December 1st. And again, the only reason that they would start to practice QE or quantitative easing is because things are looking very negative from a macro backdrop. We have the US issuing another 1.9 trillion in treasuries, and the question is, who is going to pick those up in the current market environment? Canada is practicing QE. Global M2 hit a supply and a record of $137 trillion. And governments worldwide are continuing to cut rates. Over the last 2 years, we're seeing over 320 plus rate cuts. All of this is going to lead to greater inflation and a tougher environment for anyone to actually be able to afford anything. But it's important to know why this is occurring. This is likely occurring because they see the writing on the wall. Things are likely going to get worse before they get better. Now, speaking on rate cuts with the Fed, the odds of a no rate cut at the Fed's December 2025 meeting surged to 53% because markets are truly worried about inflation. And one thing I've noticed about Polymarket is it's a pretty good truth machine. At the end of the day, there's incentives for people to be right. They don't care about an opinion because their money is on the line. And so this is actually a good indicator that we're likely not going to get a rate cut in December if inflation continues to rise, which would be another negative thing for the markets. And just on the day, another $1 billion worth of levered crypto positions have been liquidated in 24 hours. Consistently, we're just hitting record after record after record. We've seen more leverage in this current market environment than we ever have before in crypto. And that is likely due to two factors. One, that we're a maturing market. And because we're a maturing market, the second factor would be that a lot of institutions have now entered and play bigger hands. So I expect this to become more normal in the future as the market grows and expands. But because we're seeing so much leverage and so many institutional players, this is also going to create a harder environment for the average retail investor to truly invest and play in crypto. Back in the day, it used to be easy, and now we're kind of living on hard mode. And so as I've stated in past videos, the trend is your friend. If the trend is down, you're putting in a series of lower highs and lower lows, then it's likely you're going to want to bet in that direction. And that is fully supported by the fact that we're seeing open interest, which are contracts and futures, continuing to climb. You can see this trend to the upside on open interest candles, while Bitcoin price action continues to decline and dump, and the rest of the crypto market is following. They are highly correlated, but this is indicative of shorts opening at the market, and we're reaching a new local high of open interest. And this would be the very first time we've seen this much open interest or leverage in the system since the all-time high, which came back in October. To further confirm this, if I go to Bitcoin and the 7-day time frame on the liquidation map, you can see that if I pull off all of the, the actual exchanges, we have an insane amount of leverage to the short side to the tune of almost $10 billion, whereas very few people are confident to the long side, about 5 times less to the tune of $2 billion. So that said, it does look like the bears are in control as open interest reaches new highs, meaning leverage is teed up to the hilt, which could cause for an insane liquidation event yet again. And so with that data in mind, I would be very cautious if you don't know what you're doing or you're newer to the space, because taking on any leverage right now might get you wrecked if you don't do it at least very small to start and then confirm that position by laddering in or scaling in. But if I were going to be betting on Bitcoin, I'd be betting to the downside once we retrace a bit, and I will cover that shortly. But first, I want to dive into a few positive developments. One being that Coinbase CEO was live on CNBC this morning talking about the crypto market structure bill, which is going to provide a solid framework and a true foundation for crypto to succeed in new bull markets with greater institutional support. So I'm not saying just because we're going to get this to potentially pass this year, likely into next year, that it's not bullish. It just might not be enough to support the market right now. Either way, let's have a listen to what he said, which is very positive for the entire space.
Yeah, well, we had great meetings with the Democrats in the Senate and on the Republican side today. And the good news is that there's strong bipartisan support and will to get this market structure legislation done. It's important for America, and the 50 million Americans who've used crypto want to see it get done. And so one date we heard floated was, let's try to get this markup done before Thanksgiving. I think that there's 90% of the issues are already aligned on and agreed, and there's draft text going back and forth, a lot of great cross-functional collaboration happening. That last 10% are the remaining issues, and everyone committed to get in the room together and work it out, and hopefully we'll see some draft text or get it out of committee by Thanksgiving.
And so this will truly open the corridor for many banks to now service crypto and even offer all sorts of new products moving forward into the future, because they no longer fear regulatory attacks. To further confirm institutional support, you have another major player, the largest public company holder of Bitcoin, accumulating even more, as they just bought 8.17 thousand Bitcoin for almost $1 billion at an average cost of $102,000 per token. Now, currently strategy is down. They're issuing a lot of debt, but they are thinking long term. They're not thinking this year, even if Bitcoin dumped to 60, 70K, they would continue to accumulate. So you're always going to have major players like strategy continuing to accumulate. Now that operates like a dual-edged sword, because at some point in time, it is possible that once their collateral or Bitcoin dumps too low, they can be liquidated or be forced to sell a major portion of that position, causing for even further downside. And if you remember back in 2022, there was a guy by the name of Sam Bankman-Fried with FTX. No one saw it coming. An event like that can cause the market to dump even below what people thought was possible in a typical market cycle. And so I don't want to play any guessing, because at the end of the day, no one actually knows, but I'm starting to get a really good insight into how this market operates and works. Currently, we're seeing greater outflows from the ETFs away from Bitcoin than we are seeing inflows, which leads me to believe that we are likely going to continue to see downside and a trend continuation for further lows. But because we're seeing so much leverage, and the greatest leverage we've seen to the downside leads me to believe that a few whales or a few major market makers are going to try to liquidate a lot of these people and cause the market to pump heavy before the next leg down. So I wouldn't be shorting the market right now. If I'm thinking very long term, a slight dip buy might be okay, but I do believe we're going to get lower lows. But in terms of day traders, I actually think betting with the trend or shorting the market would be a better opportunity. Once a lot of these players and leverage is out of the system, we might get a pump on Bitcoin, maybe back up to like 102, or even on the high end, $105,000, and into these ranges right at that 40-week simple moving average, which has now rolled over and the price has declined below. This is where I'd be adding to a short for a new low or even a double bottom right back here at $91,000, which is where we're currently at. If that were to occur with Bitcoin, I can assure you XRP is likely going to follow suit, as XRP has now seen resistance at that 40-week moving average 3 separate times. So it's possible XRP puts in a new lower high somewhere in the 235 to 240, maybe even 250 range. And in those ranges, I'd be looking for for shorts or to sell the token, while at the same time thinking about good opportunities to buy dips from an investment standpoint. So this is a trading strategy, but in the long run, I think crypto is not only here to stay, it's just going to see more adoption and support. So buying dips on an XRP well below this range low of $1.62, likely coming back down to at least $1 to $1.25. Anything below there would be a great dip buying opportunity. As things stand, I wouldn't be adding to risk. I wouldn't be buying a ton right here. I'd actually look to create income opportunities for myself as the market likely rallies through this week, or we see some mass liquidations on all of those futures and short traders. So to make a long story short, I don't think we're out of the woods just yet. And by the way, I'd practice extra caution right here at that $2.10 level, because if we break down from here, it's likely we're coming at least back down to $1.95 and potentially even below $1.70. And at that point, I would do a dip buying frenzy, but I would likely hold it for a short while into a retrace. And by the way, if you're wanting to learn more about how to trade in crypto, be sure to join Altcoin Pro and take any one of our courses and classes. Go ahead and hop on my live calls on technical analysis where you can get your questions answered live, and I teach you everything you need to know to be an expert on the charts. Heck, you could take advantage of our DeFi yield opportunities where our DeFi Mo expert shows you step by step how to take advantage of some amazing opportunities to put your US dollars to work if you're sitting on the dollar in this current market environment where you can earn up to 26% APY. Now, the reality is these don't last forever. They're not meant to. They're meant to incentivize you to add liquidity into these pools. But all it would take is about 15 minutes once per week to earn this type of a return. And when you do the math, that adds up to virtually no time whatsoever over the course of a year. About the amount of time it would take you to work an 8-hour shift one single day of the year. So if that sounds interesting to you, check out Altcoin Pro. If you want to learn how to short the market and take advantage of all sorts of short opportunities, go and check out blowfin.com through our Altcoin Pro link in order to access just a bit of leverage. I wouldn't recommend a ton, but they offer all sorts of cool tools, trading resources, and even copy trading where you can follow leaders, check the leaderboards, and the people that are making the best trades. You can put your capital to work in that same account that essentially copy trades those people, so you don't have to. And all of this is directly available through that link at Blowfin. Be sure to check it out in the bio below. So if you enjoyed the video, be sure to subscribe to the channel and also check out any one of these resources if you're trying to get ahead of the crypto market into the end of the year. Thanks so much for watching. Until next time, goodbye.